how the debt system was designed to never be repaid every second. Somewhere in the world, another country goes deeper into debt. Governments owe trillions, corporations owe even more, and ordinary people, they owe their future. But here's the real mystery. If every country is in debt, who's the creditor? And if everyone owes, why does the system still function? Instead of collapsing, what if the entire structure of modern finance, from the dollar in your wallet to the mortgage on your home, was never designed to be repaid at all? What if debt isn't a flaw, but the feature that keeps the machine alive? Today, we uncover the hidden logic behind the world's most successful illusion. Long before Wall Street or spreadsheets, there were clay tablets etched with numbers, promises, and names. 5,000 years ago, in ancient Mesopotamia, the first debts were born not from greed, but survival. Farmers borrowed grain before harvest. Kings borrowed silver for wars, and when they couldn't pay back, they paid with something else: their land, their labor, their freedom. Debt wasn't just money owed, it was control. Whoever held the debt owned the debtor. From that moment, power began to shift from the hands of rulers to the hands of lenders, and the blueprint for today's economy was quietly drawn in clay. Fast forward to 17th century England, goldsmiths realized something extraordinary. People rarely withdrew all their gold, so they began issuing receipts for gold. They didn't actually have promises backed by nothing but trust. This was the birth of fractional reserve banking, a system that creates money out of debt. When banks lend, they don't hand out existing money. They create new money with a few keystrokes, a signature, a promise to repay. But here's the trick: when that loan is created, only the principal enters circulation, not the interest, which means, mathematically, there is never enough money in the system for everyone to repay what they owe. So what happens? New debt must always be created to pay off the old, and the cycle continues endlessly. This isn't a bug in the system, it is the system. After World War II, the world tried to stabilize this chaotic machine. In 1944, nations gathered at Bretton Woods and agreed every major currency would be tied to the U.S. dollar, and the dollar would be tied to gold. It was an elegant promise: 1 ounce of gold for $35. But promises built on debt rarely last. By the late 1960s, the U.S. government had spent more than it could afford. War, welfare, expansion, and foreign nations started demanding their gold back. Then came August 15, 1971. President Richard Nixon appeared on live television and calmly announced that the U.S. would temporarily suspend the convertibility of the dollar into gold. That temporary decision has lasted more than 50 years. Money was no longer tied to anything real. It became pure debt, backed only by confidence, enforced by law, and multiplied by banks. From that day on, the world's currencies were free-floating illusions, promises backed by promises, and every dollar created meant more debt to someone else. Once the link to gold was broken, governments discovered their new superpower: infinite spending. Need to build? Borrow. Need to fight wars? Borrow. Need to bail out banks? Borrow again. The U.S. national debt in 1971 was $398 billion. Today, it's over $34 trillion. Global debt now exceeds $315 trillion, more than 3 times the entire world's GDP. If you earned $1 every second since the birth of Christ, you'd still be in debt today. And yet, the system keeps running, because for every debtor, there's a lender collecting interest. And those lenders, banks, funds, corporations, depend on debt expansion to survive. If the world ever truly repaid its debts, the global money supply would collapse overnight. The system literally cannot function without more borrowing. Over the decades, every solution has only deepened the problem. Lower interest rates, people borrow more. Bailouts, more government debt. Money printing, inflation, another invisible tax. Even debt forgiveness doesn't solve it, because the erased money vanishes, triggering deflation, which then forces more borrowing to restart growth. The system feeds on itself like a snake devouring its own tail. And the people at the bottom, ordinary citizens, are the fuel. Every credit card swipe, every mortgage payment, every student loan installment keeps the machine humming. Today, a new chapter is being written: digital money. Central banks are experimenting with CBDCs, central bank digital currencies. On paper, they promise faster payments and security, but behind the code lies the same ancient pattern: debt as control. Imagine a system where every transaction, every purchase, every debt is programmable and trackable. In the name of efficiency, the same debt-based structure becomes even tighter. The only thing that changes is the form of the chain. So what does this all mean for us, the debtors, the taxpayers, the ones inside the system? At the end of discussion, we got a few takeaways. First, debt isn't temporary, it's the foundation. Every dollar is born as a loan. Repaying it destroys that money. To keep economies alive, new debt must replace the old. Second, inflation isn't an accident, it's a requirement. Without constant expansion, the system collapses. Prices must rise so debt can seem manageable. Third and last, control follows credit. Those who issue debt, whether banks, corporations, or central authorities, hold power over those who depend on it. The debt system isn't collapsing, it's evolving. From clay tablets, to gold coins, to digital tokens, the rules haven't changed, only the players have. And every few decades, when the system strains under its own weight, it resets, wiping the slate clean for another cycle. So maybe the question isn't when we'll repay the debt, but how long we'll keep believing we can. If this story opened your eyes, don't let it end here. Share this video, help others understand how money truly works. Because once you see the system for what it is, you'll never look at debt the same way again. Up next, we'll discuss the hidden mechanism that makes every dollar worth less each year. Stay connected.